S&P 500 as we get ready to trade April week one. Yeah, we're already at April week one and we're looking into the second quarter now. All week we'll still be in the month of March, but all the securities that trade Monday and Tuesday, they'll settle in March and Q1, but things Wednesday, Thursday, and Friday are going to start settling in the next quarter and the next month. So let's look for a big change in the market between Tuesday and Wednesday, see if that fuels anything. We're starting off with a look at the data points. There's not much going on Monday and Tuesday of this week, but as we get into Wednesday, we've got GDP data and the ADP report on Wednesday, both pre-market. ADP is going to be the precursor to Friday's jobs number. Yes, we already have a jobs number this week because Friday is April 1st. And the first Friday of each month, we get the non-farm payrolls report. So that ADP number comes out Wednesday. And even though it's not really been matching up lately to the non-farm payrolls report, the market sort of anticipates it anyway. We get GDP. Overnight, going into Thursday, we're going to get some China manufacturing PMI data. And looking over here, their last one just hung on to that 50 mark because, remember, it's got to stay over 50, otherwise you start to see a contracting economy. Here you can see that consensus is that it's going to come in under 50. So that's something to watch for overnight. If you're trading anything on Wednesday and holding any positions overnight, Wednesday into Thursday, just be mindful of this data and that it could really push markets to open higher or lower on Thursday. On Thursday, we'll get weekly jobless claims. We get some data that the Fed really watches, this personal income, this core personal consumption expenditures, that PCE. That's something that the Fed really watches and takes into consideration in their, on their rate hikes and so forth. Chicago PMI, a little more of the China PMI data coming overnight Thursday into Friday. And then, of course, on Friday, we get our jobs report, our government jobs report, the non-farm payrolls. And then we get our own big dose of manufacturing PMI. We get that double dose where we have it at 9:45 and at 10 o'clock, the ISM and this market PMI data. So that's going to be a big market mover, that alone, the jobs number in the pre-market and then this big hit of manufacturing PMI after the market opens. Plus, Friday's going to be April 1st, start of a new quarter. So be on your toes this week. Very data-driven time. Not so much Monday and Tuesday, but as we get into Wednesday, Thursday, Friday. All right, here was the S&P on Friday. What a roller coaster. If you held on to some calls and held them into the highs on Friday and unloaded here up at this look below the 100-day, this was a real obvious spot to fail. Look below that next simple moving average. This is the one that's at the very top of the heap, too. We've already passed through the 10, the 20, the 50, the 200-day. The 100-day simple moving average is the one that is still over our heads, and that is right where we looked below and failed on Friday. And you can see we came crashing down below the open, below the initial balance low, tried to get back in here and did another drop late in the day, and then this big rally into the close, but it held a lower high against the high of the day. This kind of stuff just absolutely murders calls as long as you get out of them into these swings up to these simple moving averages. And then falling back down, you can see that this low of the day was kind of judged against the high of the day on Wednesday. So good for you if you were really following these levels. I wasn't really trading at all towards the end of the week last week because I had some commitments and I was only commenting on the market for about the first hour of the day. But I'll be back on my regular schedule this week coming up. Good, because we're going to actually get some real market moving data and so forth. Looking over here at the roadmap, you can see we're coming upon a 10-day simple moving average crossing up through the 50-day. So recently we had the 10-day cross up through the 20-day. And you can see here was the day that happened. The market tried to sell off into that and treat it as an overbought event. So let's see if Monday, Tuesday, they're going to try it again here with, kind of maybe taking this look below the 100-day and fail as a chance to try and sell this market off towards the 10 and the 50-day simple moving averages. If I'm wrong about that and we open and pass right through this 100-day simple moving average, our last stop here before we really start to get back towards the all-time high is this set of failed highs that were made at the beginning of February. That's this green band here trying to highlight this this sort of little double top that was made here up in February. The February high itself was 45.95. So basically, if we can pass through the 100-day, we're going to take a shot at 4,600 and see what happens there. Or we're going to come in my opinion, it's either going to be that, or we're going to come in and we've seen our high for now, and we've got this high, this lower high, and another lower high, all based around this activity at the 100-day simple moving average. You can see that is what happened here and here as well. It was both looks above the 100-day and fail. So maybe the same thing's going to happen here. And maybe the market's going to look at this 10, 50-day simple moving average cross, which in normal circumstances would be a bullish event, but it's coming on the heels of a big rally. So a lot of times the market uses it as an excuse to sell off a bit and treat this as an overbought event. And if so, then our 200-day, our 10-day, and our 50-day, and then our 20-day simple moving averages are all our targets. The March halfway back, if the high on Friday stands as the March high and we don't go any higher, our halfway back right now is about 43.52. That's a great 80 handle roll level. The market loves to pull back to those 50 handles, 44.50, 43.50, so on and so forth. So that would be ultimately a great target to pull back to and get long here as long as the 20-day holds. Okay, so let's take a look at what's going to happen if we were to break out over that 100-day and surpass these February highs. Like I said, there's really nothing holding us back until we get to this sort of failed bounce in the middle of January, and that would take us all the way up here to about 47.40, 47.50 or so. So about another 200 points higher if we get through the 100-day and get through these February highs here. Basically get through 4,600, consolidate and hold, then 47.50 or so is the next target. Okay, anyway, I hope this video helped you out and gave you a good idea of where we're at. It's, really, really good basic stuff here. That March halfway back intertwined with these simple moving averages to the downside, or taking out these February highs, consolidating at 4,600 and moving on to a target of 47.50 or so. Try and take a shot at this sort of failed bounce in January. That would be the upside scenario. Okay, have a great rest of your Sunday. As always, good luck and good trading.